This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on February 14th, and we say Happy Valentine's Day to you, 2014. Don't forget, radio show is on your favorite radio stations. The shows are archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio, subscribe to the podcast. You will never miss a show. Our radio show is portable. Connect with Harold via RareColoredDiamonds.com. The telephone number 1-800-432-1022 to speak with him personally and privately. His auction website is hsfineauctions.com. And Worldwide Precious Metals, a great precious metals company out of Vancouver. Harold has recommended them for over 10 years. When it comes to investing in gold, silver, platinum, palladium, these are the people you can trust when it comes to starting your own precious metals investment account. Connect with them, www.pmc.com. And the telephone number 1-866-623-2002. Don't forget, Monday, Family Day, and in the United States, it will be President's Day. The markets will be closed. This week in the United States, in a shocking move, a lot of people were very surprised the Republicans went along with this. The Republicans, they, along with the Democrats, extended the debt ceiling to March 2015. Now, they didn't put a cap on the debt ceiling. They just extended the debt to March 15th, 2015. If you can believe that, that means you're in a situation where they can spend whatever they want from now until 2015. Gold and silver had a very strong week. Silver in particular, a lot of people coming out and writing some very interesting articles. In fact, James Turk went on to say this week, even though gold is stealing the show so far this year, don't overlook silver. It looks ready to catch up. The gold to silver ratio peaked at about 65 at the end of January and has been gently declining since then. It is now just under 64. In fact, today it's 63. When silver huddles above resistance at about 2025 or 2040, its upside advance will likely gain some momentum, resulting in silver's outperformance and an accelerating decline in the gold-to-silver ratio. Also during the week on the Canadian Business Channel, Don Vayu, research analyst at Horizons ETF Management Canada, said silver is entering into a period of seasonal strength from late December to the beginning of March. Average gain per period in the past 16 periods was 11%. The trade was profitable 11 of the past 16 periods. That was on Market Call on the Canadian Business Channel. We have that in our newsletter. Harold, obviously there is seasonality with gold and silver, and we're really starting to see, not only because of the fundamentals we believe, but the technicals, gold and silver really take off this week.
You bet. It was a great week, and we did see gold break through its major resistance level of 1270, and we did get the two closes above 1270. So actually it was a phenomenal week. Gold, as we're taping the show today, is up another $15. So not only did we break through the 1270 this week, had two closes above it, but we now hit a high on Friday as we're taping the show of 1322. The last couple of weeks we said if gold did break and had two closes above 1270, that the next major line of resistance for gold is at 1325, and we hit 1322 so far today. So we're getting very close to the next major line of resistance, which is 1325. We get two closes above 1325 next week. The next level, believe it or not, for gold, next major line of resistance is all the way up to 1650. So it's funny how this works, because on top of that, the U.S. dollar is falling. Okay? So the U.S. dollar, as we're taping the show, is down another 13 points at 80.17. Now, 80 cents is not an overly important number in the U.S. dollar. 78.5 cents is a very important number. So basically, if we get the U.S. dollar to fall further, which it should. I mean, let's face it, the U.S. dollar is a very weak currency. If it breaks 78.50, the next major number for the U.S. dollar is at 72.5 cents. At 72.5 cents, that puts us back to where we were in 2011 when gold hit 1920. So let's look at this logically. Right now, gold is trading just below the 13.25 level, and the U.S. dollar is hovering right at around 80 cents. We get to 78.50, that could literally put the price of gold right at around that 16.50 level that I just mentioned to you, because there is a direct correlation between the U.S. dollar and the gold market. As the U.S. dollar continues to fall, gold should continue to rise. So basically, if we break 78.50, which I believe we will this year, and then the market starts to free fall down to that 72.5 cent level, just to bring you up to date, in 2011, when we hit the all-time highs in gold of $1,920, the U.S. dollar was at 72.5 cents. So again, that direct correlation between the U.S. dollar and gold seems to be working at this particular point. Again, do I totally trust the government at this point here in the Federal Reserve and the banks to let gold trade on its own? No, I don't. But the fact is that we do know that the trend is always your friend, and the trend for gold and silver is much higher. It always has been. In actual fact, the fundamentals for gold and silver have never changed. The only thing that changed was the attitude of the people that control that market. And I hate to say that, control the market, because we're supposed to be trading free markets. You know, the thing is that if you think that the price of a stock or the price of gold or oil or any commodity is going to go up, you have the right to put up your hard-earned money, go into a legitimate market, and place your bets, and if you're right, you deserve to win and collect the profits that you would have made. The same thing if you believe that the market is going to fall, you can profit by that by buying puts or going short or whatever the situation is. The sickening thing that has happened over the last 2 years is because the government has a different agenda, because they don't want the price of gold to reflect that the economy is not improving. Well, then they brought down the price of gold for that reason, and for what I think is the major reason, which is they sold so much gold and silver in these ETFs and in the futures market that there just wasn't enough gold and silver in the warehouses to back up these contracts. And that's the true reason that I believe that the government's brought down the price of gold, because there was just way too much gold and silver purchased, for the right reason, when there was not enough silver and gold in the warehouses to back up these contracts. So again, that is eventually going to be to our advantage, because it is going to prove that there is a shortage of actual physical gold and silver, which we've known for a long time, but again, the powers that be just don't seem to admit that. So all in all, an excellent week. The price of gold is trading right now at $13.22. We could break the 13.25 level. We get two closes above that, and the next major level for gold is at 16.50. And if that is going to happen, watch for the U.S. dollar to drop to about the 78.5 cent level. Unfortunately, that's not helping the Canadian dollar, which for some ridiculous reason, the Canadian government is dropping the price of the Canadian dollar even weaker than the pathetic U.S. dollar. In actual fact, the Canadian dollar has been 10 to 12 cents below the value of the U.S. dollar, and if you look at the U.S. dollar, it is not getting stronger. It's just that the government in Canada decided to drop the value of the Canadian dollar, and that was more than likely for export, situations. But again, the way that us as Canadians would basically feel that is, number one, is if you travel outside of Canada, even to the United States, it's going to cost you 10 to 12% more on your money. Or if you go to Europe, forget about it. The cost of going to Europe is, and converting Canadian dollars to euros or Canadian dollars to British pounds would absolutely add 40 to 60% to the cost of your trip. So that's when you're going to feel the weakness of the Canadian dollar. You don't necessarily feel it when you're living in Canada, just like you don't feel the weakness of the American dollar when you're living in the U.S. unless you travel outside of the United States, where there's a place where their dollar is worth much more, like Europe. So all in all, things are starting to shape up. We do believe that when the gold and silver market really takes off, it's going to be like a freight train. It's going to shoot right up like it did in 1980 when the price of silver went from $20 to $50 in just a very, very short period of time. You see, the fundamentals for the market in gold and silver are still there, and they're very strong, and they really have never changed. The only thing that changed was the perception of the marketplace, where they tried to convince everybody that gold and silver was not a good investment, that stocks were a good investment, and then you saw what happened with the stock market. You saw a stock market in the United States that went crazy. It went all the way from 6,500 in 2009 all the way up to 16,500. And that wasn't based on any fundamentals whatsoever. It wasn't based on the U.S. economy getting better. In actual fact, the U.S. economy has not really gotten better. Of course, it's gotten better from the doldrums that we were in back in 2008 and 9 when the markets absolutely plummeted. But the fact is that we know that the unemployment numbers are bogus. We know that that's really closer to 20-25%, but nobody will admit that. We know that the inflation rate is higher than what they say. We know there's a lot of things going on in the government at this point because it's so desperate, that things just don't seem right. But what is right is the fact that you need to own hard assets in this type of marketplace. There's a lot of ramblings going on right now about confiscation of assets. There's a lot of talk in Europe about situations similar to Cyprus, and we're going to talk more about that as we have more and more information. But the overall scenario is absolutely frightening to think that what happened in Cyprus last year is being planned again. And we always talked about that. We said that, we always felt that Cyprus was a test to see how people would react to their money being stolen from them. And because the reaction from the people in Cyprus was not, burning down buildings and martial law and everything like that, they almost accepted it as a norm. Now we feel that that could be the norm in Europe and eventually in North America. It's absolutely a frightening situation. That's the reason why we need to be diversified, number one. Don't put your money into the paper asset market because the stock market could fall so quickly, it's not even funny. We saw a 1,300-point drop in about 2 weeks till they brought the market back up this week. So, again, all in all, I love what happened in the metals markets this week. I believe it's a direct correlation to the weakness in the U.S. dollar and the overall bullishness of the gold and silver market. And don't forget, when the hedge funds come back into this marketplace, when the market tells them that technically it's right to do so, because these hedge funds don't work, they work primarily on computer programs. And when a certain commodity or stock or whatever hits that certain price, automatically it will be bought by the hedge funds. They do this all by computer. So it's nothing to do with emotion. It's nothing to do with sitting down and plotting and charting graphs and charts. All it is a computer situation that's going to tell them when to get back into the market. And believe me, if we have two closes above 13 1/4, which I believe we will probably next week, we could see this market take off to 1650 so fast it'll make your head spin. So basically, that's why you don't want to trade the gold and silver market. You want to own it outright. We've always said, buy the physical market, hold it. Don't worry when the market goes up and down because we're not trading this market. We're buying it for a specific reason. And the reasons are very, very important. Currency devaluation, confiscation of funds, the fact that currencies all over the world are weak. The fact is that we're going to have massive inflation, and there's also talk of deflation over the shorter term. There are so many issues out there. There's an article in the newsletter this week that you've got to read that is all about the derivatives market, and I've been talking about the derivatives market forever. The derivatives market, to me, is one of the most frightening situations that we could ever be involved in. Most people don't understand it, but you're talking about a market that is unregulated, that is in the $500 trillion range. Just imagine what happens when interest rates go up and these derivatives start to get volatile and nobody knows what to do with them. That's what happened in 2008 with Lehman Brothers, and believe me, the derivatives market is much, much larger than it was back then. We are not out of the woods at this particular point. In fact, most of the major problems are right in front of us, and we need to be smart about this. We work way too hard for our money to let it be lost in the markets or confiscated or taken from us or whatever. You've got to be smart. You've got to own the type of assets that are not necessarily affected by all of the above. You need to own physical gold and silver as a hedge against currency devaluation and inflation. You need to own diamonds as a way to own an asset that could be sold in other currencies. There's hard assets that could do way better for you than the risky and volatile markets that are out there, especially the paper assets like derivatives and stocks and mutual funds. So, again, diversification at this point is paramount, and owning physical gold, silver, and diamonds is one of the most important things that we could do at this particular point.
There's only one company Harold recommends you use when it comes to investing in gold and silver, platinum and palladium, two assets to look at as well. It's Worldwide Precious Metals, Canadian company out of Vancouver, leading precious metals bullion dealer worldwide, recommended for Harold for over 10 years. And they're the experts to trust and work with in this very specialized market. Start your own precious metals investment account today. All gold is allocated either wholesale or premium. If you don't understand that, they'll explain it. Worldwide is there to help you maximize the profit, minimize the risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored in your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium investment in the specific coin and bar form is something new. Ask about that too. Stored metal is outside the banking system. The metal can be delivered to your door, and Worldwide has worldwide access to the physical precious metals that you want in your portfolio today. They have an outstanding website. We'll answer a lot of questions for you. Go to wwpmc.com, wwpmc.com. The telephone number 1-866-623-2002. That's 1-866-623-2002. Get our free weekly newsletter from Worldwide. We send it out via email free of charge every week in the gold section. City analyst Tom Fitzpatrick coming out and saying, a short squeeze set to fuel a massive $400 spike in gold. The upside action in gold looks extremely constructive. In fact, the way gold is trading, it looks very similar to the way gold traded in 2012 when gold posted the double bottom and moved higher. So the constructive dynamic here is that gold posted the double bottom at around 1180. When we saw the bullish weekly reversal, gold now has clearly broken above the trend line, the downtrend. Gold is also above the 55-day moving average and heading towards the 200-day moving average, which is coming in at 1306. The gold market is picking up momentum. If you look back in 2012, it was at this point the gold market began to accelerate to the upside, especially once gold broke above the 200-day moving average, which, as I said, is currently 1306. What is more impressive is how the gold area has continued to rally, even in the face of a strong bounce in the equity markets. And he goes on to say, we're watching the area of the last high, which comes in at about 1362. But the most important level by far is 1434. This was the peak that we saw gold at during the last bounce last year. For us looking at gold, he believes that the next direct level is 1434. And then once we get there, we possibly could go much higher. In fact, he's talking about $1,650 to $1,700. Get this chart from our free weekly newsletter. Worldwide will be happy to explain it to you and go through the potential of these markets, according to city analyst Tom Fitzpatrick. And even more important, Fitzpatrick is saying silver price is set to shock traders with stunning 55% surge. Even though it's been quiet in the silver market, it's beginning to set up quite nicely. We're watching around 2061 after silver has bounced off what could be a bottom formation. The bottom will be confirmed when silver breaks above 2060. A break above 2060 would mean another $1.60 or so to the top side, which will take silver to the 2220 area, so that's 2220 in a double bottom target. He goes on to say, Fitzpatrick, there is also a second area of resistance at 2308, which was the high of the last bounce, similar to the 1434 area in gold. If silver can get up and test 2510, the ultimate then at that point would be looking for a move to the upside in excess of $6 from the major breakout point, meaning we would be looking for silver to move well above the $30 level after the key resistance is taken out to the upside. You can get this chart and get more information from Worldwide Precious Metals. They'll explain the charts to you and the technical analysis behind it and what Tom Fitzpatrick from Citigroup has to say. The telephone number to connect with Worldwide, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com, wwpmc.com. And if you take a look at what we had mentioned off the top of the show, Don Vayu, research analyst from Horizons ETF Management, went on Market Call on the Canadian Business Channel, BNN, and recommended silver as an investment. And he said silver entering into a period of seasonal strength from late December to the beginning of March. Average gain per period during the past 16 periods was 11%. The trade was profitable in 11 of the past 16 periods. That according to Don Vayu, who is a technical analyst, and you see him on the Canadian Business Network all the time. Harold, obviously we look at the fundamentals, but technicals play a huge part in this market as well. We have about 2 minutes left in our segment, and the technicals, the fundamentals are looking very, very strong for silver at this point.
You better believe it, Randy. It's very, very reassuring. As we're taping the show right now, by the way, silver's up 70 cents. But it's been up as much as 90. So again, we're starting to get those big moves again. I would love to see just the market trading on its own merit. That's what these markets should be doing, and people should be able to make up their own decisions as to what they want to do based on fair market play, and that's all we're really asking. But all in all, again, having a strong week in gold and silver. 13 and a quarter is a big number for gold. 2 closes above that will set gold on its way to probably 1650, and that would be a great way to get this year started.
And we talk about fundamentals. Take a look at what's happening over in Greece. Their unemployment nightmare continues. In fact, the unemployment rate climbed to 28%, and youth unemployment is around 60%. Then you look at the United States, 91 million Americans aren't looking for jobs. In fact, they have 118 million employed full-time, 91 not looking for a job, 28 million employed part-time, and then you have 10 million unemployed. There's one other chart we want to pass on to you, and it's worth looking at. Mark Hulbert from MarketWatch, the website, came out this week and actually put this chart out there. A scary 1929 market chart gains traction. If markets follow the same script, trouble lies ahead. And it's a chart that is overlaying our current period with the Dow Jones back in 1928-29 when the stock market absolutely plummeted. And that is a chart that you definitely want to take a look at and get from Worldwide Precious Metals. Connect with Worldwide. wwpmc.com is their website. The telephone number, 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. Going to come back and talk about diamonds. RareColoredDiamonds.com is Harold's website. He has hsfineauctions.com. An outstanding auction a couple of weeks ago. We'll talk about that and more as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on Valentine's Day, February 14th. Happy Valentine's Day. And Harold is joining us via the telephone. Connect with Harold, RareColoredDiamonds.com, 1-800-432-1022. His auction site is hsfineauctions.com. We'll announce our next auction very, very soon. Stay tuned. There's only one company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, Worldwide Precious Metals. Their website, wwpmc.com. The telephone number to connect with them, 1-866-623-2002. 1-866-623-2002. Get our free weekly newsletter from Worldwide or from Harold. Worldwide will be happy to explain some of the charts we talked about in the first half of the show regarding gold and silver. They're saying that we could see a 55% move in the silver price from where we are today, and gold up $400. Let them explain that to you. connect with them. wwpmc.com, 1-866-623-2002. Harold's website for diamonds. The featured diamond of the week from rarecolordiamonds.com is a .30 radiant cut, fancy, vivid, purple pink argyle. An absolutely gorgeous, vivid purplish pink. One of the things I noticed is how vibrant and bright this color is on the diamond. And you can see it. We have video of the diamonds online. We have a picture of it as well in our newsletter. You can get our newsletter from Harold and take a look at the featured diamond. We have a story as well. We actually had this about a year ago, and they updated it. And the thing that's interesting about it, there's a picture of a champagne flute. And in that champagne flute is pink diamonds. There they are. You can see them when you get the newsletter from Harold. And that's it, Harold. Those are the diamonds for 1 year for the whole world in one champagne flute. Those are the pink diamonds. And it really puts things into perspective. We have a world with about 7 billion people, and for those that are interested in pink diamonds, there's one small champagne flute full of pink diamonds. It goes to show the rarity behind this investment.
Oh, you bet, Randy. It's one of the best investments you could ever possibly make, and the featured diamond is just an outrageous diamond. Vivid is the highest color grade that you can possibly get, so consequently, these are the most expensive and most in-demand diamonds. And Vivids, I mean, you can barely keep them in stock because when you buy the very best, you always get the most back for it. And again, these diamonds are in such short supply, and we know that the mine is going to close soon. So again, the prices of these diamonds just keep skyrocketing. In actual fact, if you look at our website, which many, many people do, and you look at it from a week ago to today, we had, under the fancy pink argyles, we had over 40 of them, and now we have 6 of them. Under the fancy intense pinks, we also had about 35 or 40 in inventory, and now we have 6. And then on the fancy vivids, which we had more fancy vivid pinks than anybody in the entire business, and we still do, we had over 20 of them on our website, and now we have 7. So we had a group of investors come in from Europe, and they literally bought almost all of our inventory of argyle pink diamonds. And they did the same with our yellow flawlesses. I had over 200 yellow flawless diamonds in inventory, and now we have less than half of that. And what our plans are also for this year's production of our yellow flawlesses is we're making a 100-carat necklace, a matching bracelet, earrings, and ring, which will take off the market almost all of this year's production of yellow flawless diamonds. So basically, investors are getting into this in a big way, and it's an obvious thing that when something as important as an argyle pink diamond is not going to be here within 6 years anymore, and these are one of the best investments you can make. These diamonds go up anywhere from 15 to 50% a year, depending on on what color and what type diamond you have. So basically, almost all of our inventory of argyle pinks in the fancy pinks, the fancy intense, and the fancy vivid have now been sold. Now, I've got to go back into inventory and personal collections and what we bought for the last 2 cycles with argyle and start to revideo and put up our diamonds. But we had a group of investors come in from Europe and buy probably 3/4 of our diamonds. So when you're looking on the site right now, especially under the vivid pinks, which again are extremely sought after, and the prices are skyrocketing on these diamonds can double every 2 years now. You tell me any other investment that gives you that type of return with the safety that you have in the rare diamond market. You see, these markets aren't like commodities or like stocks that go up and down based on volatility and based on people's attitude towards the market. When you buy a stock or a commodity, you're buying it off somebody who has the opposite view of you. They're selling it. So that doesn't happen in diamonds. Basically, in the diamond market, it doesn't trade on an exchange, so you don't get those up and downs. In fact, on the type of diamonds that we're talking about, these diamonds haven't dropped in price in over 30 years. So when you're talking about these argyle pinks, you're talking about the best investment diamonds you could possibly get. Some are still reasonable enough for you to put into your portfolio, But diamonds that you buy today, in less than 10 years from now, you're talking diamonds that will be anywhere from 5 to 8 to 10 times the prices that they are right now. And to give you an example of that, in 2003, I bought a 2-carat vivid purplish pink argyle tender diamond, one of the diamonds that was chosen as one of the best diamonds of the year back in 2003. That was basically 10 years ago, almost 11 years ago. I paid $350,000 for the diamond, which at that point was a lot, and today that diamond's worth about $3.5 to $4 million. The chances of ever finding a 2-carat vivid purplish pink argyle today is slim to next to none, and I have that diamond from 10 years ago. So just like we're talking, I brought that up to you now, we're going to have the same discussion in 10 years from now. And if you haven't purchased these type of diamonds, you will never, ever get another opportunity to do this, because there will never be another mine in existence that produces 95% of any given diamond. That's only happened once before with blues, and look what happened to the price of blue diamonds. They went from $200,000 a carat for a vivid blue to $2 to $3 million a carat if you could ever find one today. So that's what's happening in the diamond market. The other reason you want to own diamonds, certain diamonds, not all diamonds are investment diamonds, and again, it's important that you understand the diamond market and educate yourself. That's what we do. We have an entire learning center, and we do online seminars privately. So if you want to learn more about diamonds and you want a free online seminar, I'll do that for you myself, whether it's just for you and the family, or whether you have an investing club that's got 20 or 30 people, or you want to do it, on a larger basis. We can set that up for you. It's totally free of charge, and you basically get to experience this from the comfort of your own home as long as you have a computer. So basically, the diamond market is on fire. It's one of the best investments you can buy. These argyle pinks are skyrocketing and will continue to do so, and we do have some amazing diamonds to show you. Same scenario with yellow flawless diamonds. Again, these diamonds are extremely rare. They have to be the internally flawless, and these diamonds go up by anywhere from 15 to 50% depending on the color and the size of them. To get a vivid yellow flawless diamond today is extremely difficult, of the higher qualities. There's ours are South African diamonds. There are some Indian diamonds that are cheaper. You want to stay away from those. But if you look at our site and look under the fancy vivid yellows, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 12 of them, and that's it. And these are the most difficult yellows to get. And again, they're the same vivid color, just like the vivid pink argyle is the best that you can possibly get. In fact, one of them, the 6.5 carat emerald cut, which is actually an Asher cut, vivid yellow flawless, is up to $250,000 a carat. That diamond is $1.5 million, and I'll tell you, 5 years ago, you probably could have bought that diamond for almost half that price. That's how well diamonds are doing. We also brought up at the beginning of the show how concerned we are about Cyprus, about the fact that the governments are so desperate that they're talking in Europe about confiscating retirement funds and savings funds and using that towards, debts and all the problems that the banks are having out there. If you have your money sitting in the bank or in brokerage accounts, they could be taken. If you have your money sitting in diamonds, they could never be taken. Nobody knows that you own them. There's no paper trail of them. So basically, it's an amazing asset. It could be sold in British pounds or euros as opposed to Canadian or American dollars. Sure, we're going to have to pay a little bit more in Canadian dollars to get one of these diamonds. However, when you see what the returns are, and when you get the returns in a stronger currency, you're going to think that this was the best investment that you've ever made. So, Randy, I've never been more excited about what's happening in the diamond market at this particular point. And as all these stories are starting to come out, and as we're starting to start to feel what's happening in Europe and possibly here in North America, it makes even more sense to be in the diamond market, because again, it's a totally safe asset that could be sold in another currency, easily transported, and again, is not traded on an exchange, so you don't get the volatility that you get in the commodity and the stock markets.
And we're going to take the week coming up to take a look at this story from Zero Hedge. Europe considers wholesale savings confiscation, enforced redistribution. Reuters did a story. We'd like to take a look at that and take a look at this before we talk about it on the air. But it was interesting this week too, Harold, and it sort of flew under the radar, but in Australia there was a politician. What he wants to do is basically take your personal savings. If you had personal savings in an RRSP or TFSA, what he wanted to do, and this is in Australia now, their savings programs, is take that money and the government guarantee you a rate of return, but use that money because basically Australia's broke, use that money to fund building different projects. So you can just see the tentacles of the government, it's just spreading. It was in Cyprus. Now we have this EU story from Zero Hedge, and now we're talking about the Australian situation. Maybe what I'll do is go back and dig that story up and put it in the newsletter. When you look at it, it dovetails quite well with what we're reading this week. But can you imagine, Harold, having the government tell you where you can invest your own personal money? In a sense, they're basically confiscating your money, putting it towards what they believe is best for the collective, and you don't have control over your money. It's absolutely shocking.
It is, Randy. It is. I've got the report right here in front of me, and it's absolutely, I had to check it out on several different sites to make sure that it's true. But again, Reuters is certainly a reliable source of news. And again, the article is here, so if you would like to see it, any of our listeners, I'll email it to you. It's absolutely frightening. They're basically saying at first we thought Reuters had been punked on this article. EU executives see personal savings used to plug long-term financial gap, which disclosed the latest leak proposed by the European Commission, but after several hours without a retraction, we realized that the story is sadly true. So basically, I would like you to see the article for yourself. In fact, 3 of them were sent to me this morning. So it's extremely, extremely concerning to think that the governments can come and the banks can come in, take your money, and do whatever they want with it, and then go ahead and try to get it back again. That's why we're saying have money in physical assets, not all your money sitting in paper, because we're going to wake up one morning and find out that they stole our money, and they're going to give us worthless paper to say that they're going to pay us 3% or 4% a year on our money. We know that didn't work in Cyprus, and it's certainly not going to work here. People are not going to react the same way to their money being stolen in Canada and the United States as they did in Cyprus. So basically, another extremely sound reason to have some of your money put away in an asset like a diamond. Nobody knows you own it. It's portable private wealth. I could sell it for you in another country in another currency. And again, it's a safe asset that doesn't decline when the markets decline. In fact, some diamonds are negative correlated to the stock market, like D flawless whites. You could literally hedge a $1 million stock portfolio by owning a certain type of diamond. So get in touch with us. Let us discuss this with you. If this is of concern to you, and it should be, you need to know how to put your money into proper assets that are going to protect you and not be stolen from you. And don't wait for this to happen. Don't wake up one morning and go, oh, my God, I should have done this 2 or 3 months ago, and now look what we're faced with. This is a true situation. It's all over the Internet. We have 3 articles this morning that all came out on this, and I've got to tell you, it really was concerning when we read this morning. So it is available. If it's not in the newsletter this week, it will be in next week, and if you would like to see the article in advance, please just email us, and we'll send it to you. Again, we're afraid that they're going to try to steal the money that is in people's personal retirement funds and use that money for their own purposes. How frightening is that? Again, this is what's happening. This is a reason why you need to own physical gold, physical silver, and diamonds, because those are the type of assets that are not going to be taken away from you and basically can be sold in other currencies. I'm talking about diamonds. Gold is priced in U.S. dollars. So that's why, again, we're so concerned about what happened in Cyprus last year. I know my friends at Worldwide Precious Metals did a seminar last year in Canada on the banking situation, and now this is starting to come out. We really need to be sharp about this. We cannot let these banks steal our money.
And one of the things to keep in mind, too, Bitcoin, it finally had a comeuppance here this week. The glitch that will help kill Bitcoin We have that article in our newsletter. As the world's first and most popular cryptocurrency, Bitcoin has now suffered every possible setback a payment project could encounter. It was implicated in a huge drug bust when the FBI took down the Silk Road Electronic Exchange, and I guess it was a few weeks ago, one of the founders of Bitcoin, he was charged in an investigation by the FBI. And one of the other things that I thought was absolutely crazy in regard to Bitcoin, you had hackers going after Bitcoins. In fact, one of the top exchanges was hacked and all the Bitcoins were stolen. So I've never been a big fan of the Bitcoin itself. The idea behind it is quite intriguing. But I think gold and silver, diamonds have stood the test of time. Stay away from things like Bitcoin. And that's why we say hard assets, speak with Harold Siegel. RareColoredDiamonds.com is the website. The featured diamond of the week is a .30 carat radiant cut, fancy, vivid, purplish pink argyle. We have the video. We have a picture of it. We have an argyle, a story about the Argyle mine. It's called The Great Pink Diamond. And you can read that article and you can see the champagne flute filled with pink diamonds. 95% of the diamonds of the pink variety are from the Argyle mine. And Harold, it will open up people's eyes when they see that flute.
You better believe it. Again, visually, it's going to put into the proper perspective how tight this market is. When you take the entire supply of pink diamonds that come out of the Argyle mine, it barely fills a champagne glass. That tells you how small that marketplace is. And that mine is going to close. This is the most concentrated form of wealth in the world. You're looking at 95% of these diamonds are under a quarter carat. So you're talking about a very small asset, but worth a fortune. The diamond that's the featured diamond of the week is one of the rarest diamonds you'll ever see. It's a .30, but it's extremely rare, and the color of it will literally take your breath away. So, again, I'm very, very pleased that this is a market that we brought to you a long time ago. We brought it to you basically almost 10 years ago when we wrote an article called Rare Colored Diamonds, the Best Kept Secret. Nobody ever knew about diamonds at that particular point. And over the last 10 years, our clients have accumulated diamonds that have done nothing but go up in value. So I'm very, very pleased. But again, looking at what's happening in the world economy at this point and how risky everything is, and now this new situation out of Europe and Australia, again, it even reinforces even stronger the need to own an asset like a rare colored diamond. Not only will it protect your money, but it will make you a fortune going forward.
Speak with Harold. Connect with him at RareColoredDiamonds.com. RareColoredDiamonds.com. The telephone number 1-800-432-1022. Harold will speak with you personally and privately about your financial situation, educate you about the exciting diamond market. He has a site for auctions, hsfineauction.com. And Harold, we should touch on that because 2 weeks ago, we had an auction on a Wednesday night, and it was the best auction we have ever had. And not only did we have people from Canada, but we had people from all around the world taking part in this online auction.
It was spectacular. I was very, very pleased, Randy. Again, we had a huge turnout. It was the most successful auction. We sold 18 items. It took an hour and a half this time because there was so much bidding going on. There was one pure orange diamond. Absolutely amazing. A pure orange diamond is a combination of yellow and red, so it's ridiculously rare. It was a .35, so it's really about a third of a carat. And the diamond sold. There was 35 bids on that diamond. It was a phenomenal auction. We also had some magnificent coin sets. We had the Year of the Snake kilo coin, a kilo of pure silver, 99.9 silver. On top of that, we had the Wildcats of Africa 24-karat gold collection. We had some amazing pieces, and again, everybody had a great time, and every single thing sold. So it was very, very exciting. Again, this is probably our biggest contribution to the diamond business is our auction business. There's not another company like it. We sell each piece live, which is the way these pieces have got to be sold. And again, not only did we have investors from Canada and the U.S., but also from London, from China. We had people, because of the time difference, that were able to use our automatic bidding system. They were able to put in bids without even attending the auction. We had people also in from Australia that did the same thing. So, again, I'm very pleased with what's happening in the diamond business. Very happy for my clients that have invested in these markets, but by far the best is yet to come. Nobody's really selling their diamonds right now. Everybody's buying, but 10 years from now, and this is a longer-term investment, you're going to see returns that you will never see in any other type of market. I'm extremely pleased with what's happening in diamonds right now.
You take a look at the long-term track record of diamonds, averaging 10 to 15% appreciation per year, if not more. Concentrated wealth, a storehouse of value. It's not a piece of paper or a computerized record or some crazy newfangled Bitcoin type thing. This is something that we know has stood the test of time. And when you take a look at a diamond, obviously, they're collector cars or art pieces, but they don't really stand the test of time like diamonds do. Also, it's better than cash. It's portable wealth, real estate in your pocket, and it's tangible. It's something that you can use. Obviously, you can't wear a stock certificate or a bond or a T-bill to a party. You can wear diamonds, diamond jewelry to a party. 5 compelling reasons to invest. Privacy, portability, estate planning can be handed down from generation to generation, price stability, and great long-term growth. And Harold, diamonds have done so well over the last 10 years, and if you take a look at some of the reports that have come out from Bain & Company and others, they're saying the Far East, India, China, going to drive the growth in the years to come. It's going to be very difficult to get top-quality diamonds because of the want and need that the Far East will have. That's why we need to situate ourselves before they really start to ramp up.
You bet, Randy. Again, this is twice now that investors have come in and bought a major part of our inventory. And again, it's only a signal as to things to come. There's a very tight supply. These are amazing assets, and there's a reason why so much money is going into the diamond market. Again, look at the Argyle pinks. Soon there's not going to be any more of them. The mine is going to close before 2020, which is less than 6 years from now. And again, it's like putting money away for your future. If you're in your 30s, 40s, and 50s, and 60s, this is a phenomenal investment for you. Again, you want to hold on to these for the next 10 years, but the returns you're going to see are going to be astronomical. You'll be very, very pleased with this, with the results of this investment.
And keep in mind, Harold has the top quality diamonds on the planet. Going to his website, rarecoloreddiamonds.com, like going to a museum. And the museum piece that we're offering for investment purposes this week is a .30 carat radiant cut, fancy, vivid, purplish pink Argyle. You can see the video online, and we have a picture of it in our newsletter. Get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com or 1-800-432-1022. And take a look at the article that we have as well, The Great Pink Diamond and the Champagne Flute filled with pink diamonds. As Harold said, 2020, that's when the mine comes to a close. So 6 years away, 95% of the world's pink diamonds will be gone. A very interesting investment idea, to say the least. Harold, we have about a minute left here.
Well, again, I couldn't be happier with this week's moves in gold and silver. The market's looking very strong. We need 2 closes above 13.25, and we could be on our way to 1650. Again, the diamond market is on fire, and that's a great area to put your money for safety and for profit. So all in all, Andy, a good week. We'll report next week and let everybody know what's going on. But all in all, we're very impressed with this week's action.
Thank you very much, Harold.
It's my pleasure. I wish everybody a very happy Valentine's Day, a wonderful weekend, and a very profitable day.
Connect with Harold about that article, Europe Considers Wholesale Savings Confiscation. We'll talk more about it on the show next week. And from Worldwide Precious Metals, speak with them, those 2 charts we have from City Analyst Tom Fitzpatrick. Silver an upside of 55% from here, potentially. Gold $300 from here, or sorry, $400 from here, potentially. Connect with Worldwide Precious Metals, www.pmc.com. The telephone number 1-866-623-2002. Speak with Harold at rarecoloreddiamonds.com, 1-800-432-1022, and take a look at Harold's auction site too, hsfineauctions.com. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.